Welcome. We are back another day in the market. What's everybody doing? What's up, Papa Strata, Frank, AK Mecca in the chat. Everybody else joining in on this Thursday evening. It was a pretty good day for the market. We had CPI yesterday, PPI today. You saw some crazy moves in some names today. Carvana was up 13%. Riot was up 7%. Fisker was up like 4 or 5% at one point. A couple of the premium swings like CCL and Coinbase are up 4%. CLF was up 3%. Oil has been going crazy. So a decent amount of action in the market. XME, which is the metals and mining ETF for the spiders, was up 3% today. A lot of things going on. So we're going to break it down. We're going to talk about what this all means. If there is a potential setup that could take us to all-time highs this year in the stock market. Let's talk about it. All right, getting started with Bitcoin. Started to bounce off this 25K support level, which is certainly interesting. Pretty much in 2 minutes and 50 seconds, you're going to confirm your third green day in a row. Ethereum as well, trying to get away from these lows. I'm going to delete that older triangle pattern. And we're going to create a new trend line. And this is pretty much what you're facing right now in Ethereum. If you want to look at it as a wedge, I guess you could. It's not really that clean of a wedge. If I keep touching my face, it's because I'm still sick. So I'm just like, trying not to sneeze. But yeah, it doesn't matter if I'm sick. I'm still going to be streaming. Unlike last night, as you can see through my face, it's not easy right now. But yeah. Futures are currently flat. Moving into other markets, we've got the 10-year, which retested its highs. You know, these were highs from last October, recently in August, and then this month as well at 4.35%. And it could be a cup and handle starting to form here. I could actually draw it out just like keep it on my chart. Something like that. Here's your US 10-year. Up and handle. Boom. So this could be big, right? We've looked at this on much higher time frames. It's a very big breakout taking place here. We'll see how it affects things. The VIX today actually just had its lowest candle close. Okay, this is pretty historic. The VIX had its lowest daily candle close since before the COVID crash. Okay. So we are now at the lowest point on the volatility index since months before the COVID crash. All right. We have not been this low in the VIX in almost 4 years. Since I've started trading stocks, the VIX has never been this low, which is very interesting. You had this range from pretty much the COVID crash or after we recovered from the COVID crash until now, and now you tested breaking down from the range, you try to get back in it, you flip the support of the range into resistance, and now you're breaking this support as well. So could this be a major factor in whether or not we get to new all-time highs? Well, let's take a look at the indices. All right, we're going to start off with the NASDAQ, which has been comfortably uptrending in this channel since it bottomed out in the beginning of the year. It's pretty much been an uptrend all year for the NASDAQ. If we look at China right now, we go over to the main ones. Let's go to the S&P 500. We have this pattern setting up, okay? Now, look at the price action, especially from March, right? Yes, you know, our bottom was pretty much on the S&P like last fall, but starting from March until August, all we did from March until August on the S&P was go straight up with no pullbacks at all. I would not even call this a pullback because you were just going sideways over here. Your first true pullback of the year took place in August, and it wasn't even a correction because it was only a 5% decline. Okay, our biggest peak to bottom in terms of like a swing move since March was a 5% decline on the S&P 500. And now we have recovered a lot of that. and we've been creating this triangle pattern. If you saw my stream on Tuesday night, I was basically saying that the CPI, post CPI, we should see a move towards at least the top or the bottom of this triangle. Bulls kind of got the better of the bears in the last couple of days, and we're getting close to testing the top of this triangle, right? When you create an uptrend that's this strong and then you form a smaller triangle pattern, that's a bullish pennant. Doesn't mean for sure it's going to break up, but it has a higher probability of breaking up than breaking down. So if we're just going to look at this for what it is, right? You have this bullish pennant, you've been in an uptrend. Probability says this is what comes next. This is just what probability says. Doesn't mean certainty. It says that this is going to come next. Will it be enough to get us to all-time highs? I don't know. But this should break up. We should be able to clear this $4,600 resistance level. And then we're going to be at the point of retesting all-time highs. I don't know if we're going to get it, but if this pattern plays out as it should, a pretty large triangle, almost 2 months long, in an uptrend of a whole entire year with a bullish market, if this plays out as it should, we should get a retest of all-time highs within the next month, 2 month and a half. If the pattern plays out. Now again, has to break out first. We're not fully there yet. This could be, right, technically we're approaching a resistance, right? This could be the area where we also reject, and I know nobody likes it when anybody like me is just playing devil's advocate for every single thing that I'm saying, but once you actually understand trading, you put your ego aside and you do say a lot of things that contradict each other because you don't necessarily care what happens. You just want the markets to move in a certain way and to be able to read that correctly. Sure, this could get rejected and then we can go to test the bottom of the triangle, right? But probability says you break out of it. If not on this test, in another test. So immediately following a breakout of this triangle, 45.66 is a gap fill from August 2nd that I'm sure a lot of traders will be focused on. Another way you could look at this would be just simply a cup and handle. Okay, that would be your cup and handle pretty much. And I always talk about the psychology of this on my streams. What's the meaning of this? Why are we just having fun calling something a cup and handle, right? What's the whole point in doing that? Well, think about it from a fear and greed standpoint, okay? Over here, right, you're getting a rounding action that's showing a gradual, not an immediate, but a gradual shift in trader sentiment. Over here, it was fear, fear, fear. Then over here, it was neutral, okay? There was a huge tug of war. We were ranging for so long, up, down, just chopping around. Then it became greed, greed, greed. And now we get to this point where we're back to, just for a little bit, a neutral standpoint, which is pretty much the neckline or the top of this cup. And then if you can break out of it, the greed should continue, right? So it's basically bearish, 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 neutral, 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 bullish, bullish, bullish. And then you get back up to the point where you initially had fear, which is where you topped out at last year. If you can flip that to having greed at that price point instead of fear, that should give you a move higher and create a new uptrend. That's the psychology. Once you start to look at patterns like that, instead of just, oh, it's a funny name of lines and stuff, if you actually think about what it means, right? Every single one of these candles that we're drawing lines on are literal bids and offers being placed in the market by hedge funds and traders around the world, right? So when we're using these charts, we're just psychologically analyzing that visually. We're using geometry to see, okay, based on how people have traded in the past, can we get a historical probability of what's going to happen next? If you double bottom at $5 on a stock twice, that means not once but twice there are more buyers and sellers at $5. That double bottom is just telling you that in an easier way. Okay, so you're looking for these tug of wars in the market, and you're just looking to see which side is going to win that. And these patterns can help you identify that. So that's really what we're setting up for on the S&P 500. To take a look at the QQQ, we did have this bearish harmonic print. We did see an 8% pullback once we hit the PCC of that bearish harmonic. We do have hidden bearish divergence on the MACD. There are bearish variables at play here, but you have to remember, and this goes back to historical analysis from Thomas Bulkowski, all right? In a bull market, in bullish conditions, bearish variables are going to underperform, right? You can get a bearish pattern. It can start to play out a little bit, right? But the actual bearish targets for this harmonic would be all the way down over here, right? Maybe if we were in a bear market, that would happen. But in a bull market, you might just get a little bit of a reaction when your bearish pattern completes and then just go and create a new pattern. That's potentially what is happening right now on the QQQ. Okay. We have created this broadening wedge, this descending broadening wedge, and as of today, we are breaking out of it. Now, the way I have this charted is from these two highs back over here, and I'm just counting this as kind of like a fake out, because if we really look at this, you are still finding resistance on this trend line. This is some like education on trend lines. I didn't rechart it to this, which you could if you really wanted to. It's a little bit more conservative. You would know for sure it's breaking out because there's no trend line that's more extreme, you know, than that. The reason I charted it like this is because you have more touches, right? You know, you can definitely just go the conservative way, so you know for sure that it's breaking out and that there's no more resistance going to have to break out after. But you have less touches. You only have 2 touches if you chart the trend line like this. If you chart it like this, right, you have your 2 touches over here, and you can see this candle really doesn't count because yes, you got above it, but you gapped up and you couldn't hold the gains. You didn't close the daily candle up there, but you were still seeing resistance here and here and here and here and here and here at the same exact trend line. Which is why I believe that this is the highest close above that trend line and why it's potentially a breakout. Another thing we also did, you can see this little inflection zone over here at 370 on the Qs. We flipped that back into a support. You can see that that was actually resistance right over here. It was resistance right over here. It was resistance right over here. What was it over here? It was support. So the same level we've been rejecting for a while, you actually flipped back into a support before breaking out. That's not bad. So got this setup taking place in the market. You're getting these major bullish flags, wedges on an uptrend up towards all-time highs. These could be the exact patterns that you would actually want for a continuation to all-time highs in the market. Now you can take your own fundamental analysis into the equation and depict that however you want to. I'm just showing you what the charts are saying, and this implies continuation to the upside overall in the markets. If we move over to the Russell 2000, you actually did get a bounce off this trend line in the 200-day moving average. You still have the potential for head and shoulders to take place on this, unless you can break above this September 1st candle high at 192. So that's another thing to look out for. And yeah, that's pretty much what's going on in the market right now. Of course, oil has been going crazy. Another day higher for oil, which is absolutely insane. It is starting to approach this resistance level at 77.23. I'm looking at the crude oil 2023 futures. 77.23 is a resistance level that it is getting close to. So look out for that, but nonetheless, a very strong rally. What does Elliott wave analysis of S&P? I'm not too familiar with Elliott waves. I don't really use them. Yeah, oil, energy going crazy. I mean, if we look at this metals and mining ETF, it's kind of like an inverse head and shoulders setting up over here, right? As I shared earlier in the week, we also have the XLE in a major ascending triangle. Where's that? Right. Getting very close to testing and breakout on that. Many energy names are doing well. Hopefully it'll help out our end phase swing, but we will see. The NEO swing was up 3% today. It's almost back to in profit, still holding the 200-day moving average. Lucid getting close to retesting that wedge breakout. Classic bullish divergence has developed. AMD unfortunately did not do much today. It did get up to test the wedge supply line again, but did not break it. It's still in profit though. We're going to come back to chips in a second. DTNR broke out of the wedge, just pretty much flat. And then VLO, another new one from this week, flat day as well. So in other chip news, we had the ARM IPO today. Basically, you opened at 56.10. It made highs of 66.28. So you saw an initial spike when this was listed today. You dipped a little bit, and then the last 45 minutes of the day, you went from 58 a share to 66 a share. What's that, like a 13% move? 14% move. So you saw a 14% spike in the last 15 minutes of the day. After hours, it actually went even higher to 68. So yeah, good start for ARM. I know that there was that new, I don't know, what was the new, there's another like newer ETF for chip stocks, but this is another one, SMH. I don't know if how this looks, but this is an older one. I mean, this chip ETF looks like a huge cup and handle as well. Take a look at that. Could we see more upside on these chips? I don't know. Let's take a look at Nvidia now. Not much going on here. I don't see much of a pattern. I guess it could just be looked at as like an ascending broadening wedge. MU was up 1% today. It broke out of the inverse head and shoulders. This is a premium swing that was alerted last month. It's up 12%. So very crazy stuff. This morning, if you watched the live trading, I actually swung AMC calls into today. I fully sold them. They were up like 200% at the open. I sold most of them at the open, and I sold a small amount of whatever I had left in them later in the day. But yeah, it gapped up. It went up to, like, literally I sold my calls, most of them at the high of day. Like if you go to like if you go back to the live trading from this morning, watch the first 2 minutes, which is the first 2 minutes of the market today. It was literally just, I'm like, all right, the market's open. I'm up 200%. I'm taking these profits. And I did. And then it just faded the rest of the day. So yeah, that was a cool move today. I did tweet this out earlier, Fisker. This is the most amount of days it's closed above the 200-day moving average consecutively since, I think, 2021. Yeah, since 2021. It's not closed these many days consecutively above the 200-day moving average. It's testing this inverse head and shoulders breakout. They actually put out a video today of like 200 Fisker Oceans sitting on a train going somewhere. So deliveries are starting to come out in the US as well. It's time. There were so many people back in the day telling me, oh, they're never going to put a car on the road. All they have is just a website. They're never going to sell an actual product. And now there's actual consumers driving Fisker Oceans on the road. So, yeah. And I'll stand by what I've been saying. There is no better EV you can buy than the Fisker Ocean at its price, spec-wise. You cannot tell me that there is another EV with better specs under $40,000. Find it and send it to me, and then I'll say, okay, you proved me wrong. Till someone can do that. It's just not out there. It isn't. Some other movers from today, Riot, up 7%. This is such a big support. It's double bottoming just above the 200-day moving average. Very interesting. BRM, look at that shark with the double bottom. It was up 7% today. Carvana was up 13%. 13%. It's not easy to talk right now, as you can tell. But yeah, what a beautiful cup and handle move. I had Carvana calls. I got into Carvana calls right over here, and I took profits like right over here. So I played like the first few days of this rally, but if I would have actually stuck with my original plan, which was this, it would have pretty much hit my final target today, but it is what it is. What else is going on? Apple bounced up a little bit today. It's testing a very key level. Pretty much its lows since May. It's just testing it yet again. Tesla was up 2% today. Highest candle close for Tesla since July 19th. Yeah, pretty solid day in the market. We'll see what tomorrow brings. As you can tell, I'm going to cut the stream a little bit short. It's not really easy to talk right now. I kind of just pushed myself to get on here to another stream because I couldn't stream last night. I hope now you can see why it's a little bit tough. So I'm going to recover this weekend We'll be back on the streams next week. Hit the like button, hit the subscribe button. I'm half dead right now streaming for you guys, so I'd really appreciate if you do that. And yeah, thank you for watching the streams. If you wanted to get the premium free trial, this morning I made 200% on AMC calls, 25% on SPX calls. You have until like tomorrow to get it. I'm gonna be taking out the free trial this weekend, so if you get it right now, you'll get all of next week in premium for free. It's a pin chat. You don't lose anything. Even if you don't actually join premium after it, there's a bunch of resources in it: PDFs, slideshows, documents, workshop video recordings. You can get all of it. So go check that out, pin chat. Have a great weekend. I'm gonna go rest up, and peace out.